Hey everybody, welcome to August 6th Principal Profit Trader Coaching Call. I am going to zoom out like a banshee today. We are going to take a look at different trend lines. Okay, so what I have is I've scaled this to a log so we can really get a zoom out for the percentages. And I've drawn 2011, 15, 18, 20, 22 trend line. And the one that I'm going to talk about today as we zoom in is like we'll start with the largest one zoomed out because that should have the most weight. And you can see here in 2011, right, we had this bull run and then pulled back and acted as resistance underneath it. That was the bear market. That was from July 2011 to January 2012 to then, so like over a year's worth of data. And then this also is breaking out. This took, yeah, so this is a couple of years. Each one of these bear markets is a couple of years because I've really zoomed out logarithmically, and each one of these candles is six on the 6 month chart. When we've come up in here, right? Every time we've broken above this, it's acted as a bull market. In 2015, it acted as a bull market. 2018, 2020, on the retest COVID, we also held it in 22, right? And we've come up into it, and now for the first time ever in about, I don't know, 13 or so years, we've have a candle that's closed below it. So it broke a major resistance zone. Now, this could be the ultimate catastrophe because this thing is held for 13 years, but at the very least, if we back test that 2011 trend line, it will act as major resistance. So it's just something to note that, we could potentially be in for something that's really, so the targets of, a 31,000, which I'll show you on the next chart here, to even possibly 15, it's not unheard of because this is held for 13 years and we just broke it. We look at other ones. This is from 2015, right? I am connecting it here to 23. It's red. It also broke at the top. I have a shorter one from 22. This was holding that. So I'm looking at the market fractally, and I'm breaking it down into multiple time frames with these trend lines now. In 2018, we touched here, and then we broke that. So we've broken multiple trend lines, but the one that's most important are these ones that are zoomed out. And so far, we're in a situation where trend lines that have held on micro fractions, especially the one for 13 years, has now been officially broken. And we've had a candle of 6 months that's closed below it. Now, if we come back up into it, that's going to act as major resistance. So I'm going to save that moon boy chart just to remind all the moon boys what we're really dealing with here. And we're going to zoom out on this EMA ribbon. And on the bottom of that chart, I've drawn a pitchfork. So now we know we went from zooming out multiple years. Now we're going to go on the 2 week chart, and we're just going to look at the last few cycles, right? We're going from the most zoomed out we can go, and now we're going to zoom in a little bit more. But I mean, by any means, this is still pretty far out for most people. Most people are not really looking at how Bitcoin has behaved in the past, and then narrowing it down in a top-down multiple time frame approach where this is all even helping us even on the scalp time frame, because we always want to be in alignment with what Bitcoin does. If Bitcoin's just going to be in the sideways market, that will affect the day trades, right? And it also will affect multiple things. Will affect the income producing trades, and multiple things will affect whether we reload the portfolio for a giant position trade. But the most important thing is we want to be in tune with what Bitcoin is doing. And that's why we're going to look at it from these multiple time frames. Right? We've talked about previous markets where anytime we've come up into any type of form of this EMA ribbon, it is acted as resistance. And then we had to break a sizable away from it and then spend time below it. That's where I think we are, this green apple and this green apple. And you can see last bull run, that was a drop of around 25 down to 15. So while not quite a 50% drop, close enough where that is very substantial. I know it might not look just because I don't have this. I have this in the regular format. But price-wise, that is we don't, and then time-wise, we want to get this next drop. And even still, that's me being very aggressive, because keep in mind, at this point in time, it went from 64 all the way down here. And they've all dropped a lot more. Now, granted, this might be they're getting contracted, so I'm open to a smaller bear because we had a smaller bull, but I have to see evidence of that. If there's not evidence of it, then we're just hoping. So we have the EMA ribbon, and then we have this pitchfork drawn. Now, how I'm drawing this pitchfork, right? I go here. A lot of times, like on the previous chart, I'm just using trend lines and rays. But if you want something that's more, where the heck did I save it for you guys? Yeah, right here. So you go right. If you want something that's more like a indicator that's going to draw it all for you, I am now taking from COVID. This is 17, 18. Then we got COVID in 20 here. Touching that, right? Then this thing is connecting to this recent high here, 23, and then the midpoint now I have is the 2022 low. So what are we talking about here, right? If this drops near 50%, then what's this going to drop near 50%? That at least takes, I mean, is this hard to say, guys? It takes us down to 32,000. Just say the truth. That is what the facts in their chart are saying. And that's why I have this trend line here. I think this can act as major resistance. And I think this is really the big line in the sand here. I will think we will get a reaction at this top one here. This is also my target of that 33 to 37 and a half range where we can maybe have a contracted bottom. I think there will be counter if we get a smaller rally here, which I'm predicting that we're either going to fail here or we're going to rally a little bit higher for a false breakout and fail at the 100 and 200 on the daily and the 20 on the weekly. As they roll over in a bear market, they will be shorting opportunities. Mark my words. But there's already evidence here to horizontal resistance that I almost shorted for you guys at the top here, but I don't like to really short before a coaching call. And it wasn't, there's a lot going on right now in terms of where I want to put on a giant trade here because obviously I'm not going to short with the portfolio because that would require moving too much capital on an exchange. But I do want to be able to put on a full size short, and I'm preparing psychologically to go in if we do get that false breakout. If we test the 20 on the weekly, I'm automatically shorting that. It's crossing over with the cloud. So that's already a scenario that I'm contemplating. But just like, I said I was going to automatically go along with the portfolio on a 500,000 full size for a position trade for a counter trend. If we penetrated the 300 on the weekly, we started a bottom build above it and we were off by 3,000. And guys, like I should have just went long there. I already talked about that in the past, that if you see a double top above a zone, there's a chance you will miss a move. And this was a sizable move on half a mil. This would have been from 58. That's what I wanted to get in to 67. What's 10 over 58? It's a decent move. Hang on a second. Okay, that's about a 17% move. Okay, that was a huge, that would have been like $60,000-$70,000. So like when I catch these, right? But if you're not catching them, you have to patiently wait. Like what you don't want to do is take like 1,000 day trades in between these big opportunity cycles. Okay. If you really want your day trading account to improve, I would reduce your frequency in these levels where we're wicking up. It's not that shorting is a wrong idea here. It's like, do you have the wherewithal to short every zone and still do what I said if it hits the 20? Because I don't want to be in a situation where people are getting exhausted ahead of time and then we don't take the automatic short. We have to think in if-then scenarios. If it does hit the 20, then I will short. If it does not, then maybe I could fade a horizontal resistance zone with a double top, like what manifested today. I did short the ES for you guys live, and that actually it was a scalp, went back up, stopped me out of break even. But if you actually held it and didn't scalp it, my thesis was correct. It did break the low of the day, and the bears took control. And I could take, I'll show you that in a second. But I'm gauging the ES and the NASDAQ with this whole geopolitical thing, because right now what's happening is that if crude oil spikes, the Fed, what they typically do is they raise rates. When they raise rates, Bitcoin price will go down. Okay, they want, when they hike interest rates, it reduces the money supply, and then the money doesn't trickle into these riskier assets like Bitcoin, and that's that. So We have to be in sync with what it's doing. Now, keep in mind, like when it went from here, it was like at 34, and then it hit the midpoint at 15, and that is a huge drop. You know, these huge legs down. Like, the first leg down here was from 69 down to 32. That was about 50% or whatever, right? And then the next leg down was from 48 down to 15. The next wave down, or even down here for the second wave, that's the third wave, but Elliott wave, but right here, 48 down to 17, that is a huge drop that is in a higher percent than what we just did. So the second leg down in an ABC bear market, or I'm sorry, a 1, 2, 3, 4, 5, is going to be much violent. We are the I believe right now that the ABC potential correction pattern is over, and we will be initiating our very large second violent wave down. Right, this is our first wave down. This was our first wave down. I mean, these are both drops of 50%. This is a both, so you have to think about it that and that's where they get into this every year. It's something where, because it gets contracted a little bit more, they dishonor that 4-year thesis, and they say we're in a anomalous market now where Bitcoin's going to be in a super cycle. Well, that's not worked out, and the people that have pumped that have cost everybody a lot of money. Tom Lee, Trump, son, Eric, Saylor, Kathy Van Wyck, right? They manage billions of dollars and have a really big influence, and they influence retail on news. But I don't understand how they're always wrong. I mean, Saylor has reloaded on every breakout, which was a false breakout. We called it in PPT. He's bought the dip that's kept dipping because, when you buy pullbacks, these aren't pullbacks, right? You don't want to buy, essentially, you fade a counter trend. You want to short pull ups in a bear market because most people will just hold through. That works, right? In a bull market, you could be wrong here and buy a breakout and then just be eventually right, because pullbacks and breakouts, they will eventually correct themselves in a bull. In a bear, you will buy the dip that keeps dipping. You will think every counter trend is going to be the bottom, and you will get absolutely wrecked because it's pure hopium. Just base it on the patterns in the chart on how it's behaved, because previous market behavior absolutely influences future market behavior. When I say absolutely influences, I mean it absolutely influences. It doesn't make it exactly a carbon copy or have some type of rule in the universe that it has to happen a certain way. But it is based on an inference that it will repeat again in some similar way. And since we don't know the future, this is the most honest and best way that we can approach this thing. Mm-hmm. And the cool thing about it is you have all the tools and the talent to do it without being like Eric Trump and telling everyone that this will be the last time that Bitcoin ever gets below 90,000. Well, how is that working out for anyone that's holding that bag? You went from 90 something thousand down to 60, 58,000. You just got crushed. Absolutely crushed. You bought the dip that kept dipping, and now you will not be back up there in 4 to 5 years. And if that 2011 trend line holds, this could be even a extended bear. The bull market might not even start till the first quarter. I know I keep saying fourth quarter, but just keep in mind, like, Bitcoin's never experienced what we're about to experience. The stock market might roll over big time. We might be in a big war with Iran. Every time Trump announces that there's going to be a peace deal, the Iranians start attacking merchant ships and civilians in the Strait of Hormuz. And it's just this back and forth interplay where I don't see a lot of positivity right now. And you couple that with a Michael Saylor selling Bitcoin for the first time. We have numerous .com level cryptocurrencies that will never recover and have gotten exposed as completely just people raising money without a business that actually generates money underneath it. Just like what happened in the late 90s, where any company with a website got a fund. So yeah, I'm just being realistic here, because it's like, what I'm channeling now is pretty much experience and mistakes and successes, but a lot of mistakes in terms of trusting companies, trusting research, and doing anything but looking at facts in the chart. Facts in the chart now will predominate as I position trade Bitcoin and slowly move away from alts. I've spent way too much on alts because I've unfortunately had to or was surrounded by people that are in love with altcoins and it's influenced my psychology. So I'm no longer, the damage is done, but I'm no longer hearing that type of energy every single day. I do not have a fundamentalist. They're a complete, it's garbage. Okay. Especially with these coins. So what isn't garbage though is looking at how Bitcoin's behaved, getting in at the buying opportunity of a life cycle, and then taking this for one more run up in the next 4 to 5 years. So where did I want to go to now? We'll save that. There was another chart that I was supposed to show you guys. Let's get that. Okay, so just now we went from the 6 months looking at high, top down. We went to weekly. Now we're going to go to daily for a bit. Just a very simple chart. It's a trend line that's affecting this time frame and this bear market. What I showed you in the first chart from 2011 and 13, 18 going up on all those different trend line fans is the highest time frame of where I think we could go. But what we're dealing with now is this trend line. I've connected this all-time high to this. Now remember at one point, right? We had this as the trend line. Okay, this was because that was the data that we had. Like for example, if we, this was the trend line. So when we came back up into it, right? The Moon Boys were thinking, now we have a trend line breakout. Now it is the bottom end. Now the trend line breakout is in a bear market could only be temporarily bullish, or it could become a false breakout very quickly. Look, this was bullish. It did go up to this level, which was if you have a 200 moving average, it rolled over. And I did give a signal on this double top to short here, guys. And we held runners down to 60,000, which was one of the best trades I've ever had. Okay. What I want to do is just go in on full size and just hold it right to the bottom of the leg next time, even though because I needed to stack more runners. I'm just saying how I could do it better. So hit that, and now we're coming up into this line. Let's just draw this a little tighter. We're in it right now, actually. If I draw it from the touch point now, I just had to adjust it. We're kind of really getting close to that. But the point that I wanted to make about this one that I just drew here, this blue one, is that even if we break it in a bear market, it doesn't mean that it has to, you know what I mean? It doesn't mean that it can't fail. But what's really cool, which I just showed you, which I'm glad I did, is that once we broke this trend line, right, it acted as resistance. But then when we came, and then it obviously formed a trend line here now because this held when the 200 rolled over, and this became the new trend line. But then it acted as support when we came back and tested it. Now, if I drew two rays here, I will show you how we can fan this sucker out. And we can get multiple channels on the way down here. That's what I'm just showing you. I don't have to do this live. I'll just show you the chart where I already did it for the sake of time, but I just wanted to show you how you can do it on your own if you want to find these little beauty principle trend lines on your own. Of course, I would also draw one here to get the bottom of it. Trend line's not going to go down. I don't want a trend line because I want to show how far we could potentially go. So we're hitting on the bottom, something like that. Not perfect, but good enough. Okay, so yeah, I mean, just you could see how these things can fan down. And when we time them on with our time cycle and what price patterns are making, and we gauge the momentum, we start to see bullish divergences on multiple indicators that shows that the downside momentum is waning. You know what I mean? We are going to be able to load up on this, and now we'll actually. I don't want to save those trend lines. I just want the key. I want the key one there on the daily. One sec. I'll keep this one that we did here. Then what I'll do is I'll go here. I will open this son of a gun. And I'll go on my main daily chart where I do the daily call and set what I think would be what is going to happen tomorrow. See how we're just zooming in on top down? Now, as day traders, we want to figure out what's doing tomorrow. If you're not a day trader, you want to be more concerned with what I just did previously 6 months, months, weekly, bi-weekly. Then I went to now I'm on daily. I didn't do the bi-weekly in that, but we can look at that. We'll zoom out on a 2 week and we'll look at an inverse zero line reject. Now I skipped the weekly, but I will go back to that and look at it in a second. But you can see that's the trend line that I have. We're coming up into it previously. I could pull it a little closer, but it's close enough. And like I said, we have a high volume node here, which is showing the horizontal liquidity where buyers and sellers spent the most time transacting at. So it's horizontal volume as opposed to vertical volume here. And even though this is technically the highest volume node of the higher node, which then automatically through the indicator draws the horizontal VPOC, which is the actual price line where buyers and sellers spent the most time transacting, right? It's time spent at price rather than what candlestick patterns show, just how quickly price moves through time. Anyway, the point that I wanted to make is that this high volume node is only slightly larger than this one. So this almost could have had the same thing, or they pretty much should have two red lines here. What I wanted to point out is that this is a very important liquidity level, which, not surprising, represents lots of touch points at the bottom of this trading range, which is a weird trading range. So a box, right, which would be a perfect pure sideways trading range, is, the markets are never really purely perfectly sideways, right? It's always some kind of pattern within a fractal of a pattern. It's never easy. There's just so many ways to look at this. Like there's a trade, we're obviously been trading back and forth in this ugly range. Moon boys are looking at this inverse head and shoulders, and they're saying, hey, this is it. We have an inverse head and shoulders. People that are more balanced are looking at lots of other patterns. I mean, there's also this bull flag that we're in, which is technically a bullish pattern. Remember, these are bear flags because they're ascending, but even bull flags in bear markets fail, right? We're in a bear market. It changes the context, right? Think that I'm getting ready on the counter trends. There's a lot of opportunities when, you go down 30%, you're going to have a counter trend. It's just, my perfection was to wait for 55 for that 300 penetration where we got the double bottom, even though my body said, get in on this double bottom and get out quickly. But fees have been reduced on Ledger. So there's a possibility now that I could trade with a little bit more fluidity because it was like a 2%. It's like 1.9 to get in and 1.9 to get out, but not anymore. I might have to go back and test that. So the other thing too, yesterday that I mentioned that I said, okay, could at least pause us from a momentum perspective is that I showed this setup here. Now, this is if you're just trading literally and not beauty principle wise, you're like, well, it didn't hit my orange dots. And my orange dots, sorry about that. Let's go back. My orange dots represent the 200, and the orange dots down here horizontally represent the minus 200. And we need to penetrate those to have a proper hook from extremes reversal setup. But actually, if you look at the highs here, 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 they've hit this horizontal line here, here, here. And oftentimes it's reversed right at this level that we're touching. So right here, we came up into it, right? We had a pullback at least pullbacks, right? Came back here, problem, there's a pullback. Here, close, really almost a proper hook from extremes, and then we had a bigger pullback. And then we had two inverse zero line rejects, and now we're coming up back to this area here. Here properly, right? Came up and touched it. That's where the first recency bias right here, bam. So you can see, right? And what is this? It's in confluence with this momentum that's reversing right when we get up into a horizontal resistance zone, which represents the bottom, right, of the previous trading range that we had a huge 30-something% move up from. Right, touches here, touch double bottom, and move up. So you have a launching point of directional conviction. You have the bottom of the range there. And, it also touches there. Conversely, it touched there. So it's no joke. When we get up there into that 60-something range again, you'll have this purple trend line. You'll have possibly this yellow trend line again, and you'll have a confluence of the purple trend line, the yellow trend line, and the horizontal resistance. By that time, who knows? Even maybe this 100 moving average here, and that's the 200. I think that's the absolute highest it can go. They'll be rolled over more, they'll be lower. So, I mean, I just don't think we're getting above this 200 on the daily. I mean, let alone the 100. I think it could possibly fail even here. But if it comes up here, just be ready for the false breakout pattern. We're already seeing signs of momentum waning. I already said that even since this date here, right, we were kind of creeping higher. But as this MACD kept going down, the price kept creeping up. And it became from July 6th to July 22. Now, at least 2 weeks, that becomes an intermediate time frame CCI, I'm sorry, MACD bearish divergence. What I'm trying to say is the MACD rolls over and price goes up. It's a bearish divergence. I'm not saying like it automatically equals a setup, but in confluence with everything else, what it tries to suggest is that as price is going higher, MACD is rolling over. It's having a hard time doing that. You want it to go with the momentum. Now, I'm using multiple momentum oscillators to gauge it from different time frames, right? This is more the intermediate one. This is more the one that affects it the next day, right? I'm not saying you can't find divergences in here, but I'm more looking for things that are, from extremes, inverse zero line rejects, trend line break. It's a little different. Stepping out the farthest is this one up here. And this one up here is giving mixed signals to these two, while these two are bearish. The blue is still over the orange. We've rotated from an oversold zone up into this area here. Okay, so this is actually, not actually, it is factually bullish. You see how I'm biasedly bearish in my language? I just want to say it's factually bullish, factually bearish, factually bearish. The other thing too that's bearish is the amount of volume we have in the market represented by these vertical volume indicators. It's very low. Like I said, it needs to be extreme to have a reversal of a bear market. So like last bear market, it reversed and it was way up here. Look how we're not even there yet to initiate a bull after a golden cross, even up here. So, while this was pretty good, it's nowhere near where it needs to be for a bottom, let alone the start of a bull. I just don't see evidence from it. We also have the 15.34 here. Just summer doldrums. It's just been contracting. Like I said, you want a lot of volume in the market for launching points of trend convictions. But like I said, all it takes is a little bit of fear in the market, a little bit of absence of strength. For the market to roll over. Like simply a lack of strength could produce, a bearish reversal. Okay, we're just going to keep looking at different time frames now. We're going to look at the weekly because there's a weekly setup coming up that I've given everyone as an automatic short signal. It's not there yet, so don't worry. If in the event as the cloud and the 20 roll over on first test, there should be a tradable reaction to the downside. You might say, well, up here, you went to the 20. You said every time you goes to the 20, it's a shorting opportunity. And look, this broke. I'm like, yeah, it did break. First of all, not every signal works out. And second of all, when we first went up there, it went from 78 down to whatever, 73. That's a huge move. So, you should be happy shorting that and getting that type of a move. Here, we couldn't even get there. Here rolled over and went down. So, like, basically, pull-ups to this 20. The 20 should hold in a bear market. Breaking the 20, and especially the 50, signifies the end of it all, right? Just conversely, like holding the 50 in the bull, was obviously a great key move. I mean, look how well that worked out. So, like I said, we also have this death cross here. The 20 was above the 50. That was a golden cross way back, after we got the lows. And then, because what people are saying is like, look, we have a shoulder here, a shoulder here, and a shoulder here. It's going up. But this is a huge amount of time. It's like 2 time cycles. You know what I mean? I mean, look at the size. We kind of went from like a half a time cycle into this. And this needed a full time cycle. And then an inflection here. So yeah, so coming up into like late November, December, even the first quarter, around here, that's when we can start to see signs of the bull market returning. In between, there could be, but I think it's going to happen, another violent leg down, right, where we can start, kind of forming this bottom here, up and down kind of. and then we could start. Then what we could do is form a giant inverse head and shoulders. We're gonna pull back up down here, and then you know what I mean. It's just and then take another cycle. So there's gonna be you would much rather if it's just levels, right? Then you would let's just say it was just levels, and this is the ultimate. Or no. What I'm trying to say is like if you bought here versus getting it at the right time, and then it's like imagine if you bought here because there was an inverse head and shoulders on a pullback, but it was a confirmed bull market because of a golden cross in the proper time cycle. They don't last more than a year, 4 year cycle thesis, all that kind of thing. Then your capital is not tied up. So if it's not just levels, you don't just buy because it's 50% down in a bear market if you're a huddler. It doesn't make any sense. You could buy because it's 50% down if you're a counter trend trader and you're going to get out in a couple of weeks or a couple of days, kind of a thing. That's different. A few weeks, that kind of thing. And like I said, what's concerning is that when we came up here the first time, there was this momentum. We tried to break through and we couldn't. We got an inverse zero line reject on the weekly time frame. Weekly time frame also rotating up, but not into any type of overbought category yet. I'm zooming out to the 2 week, and there's this inverse zero line reject. We don't want this to form by the end of the we do well. If you're a bull, you don't want this to form by the end of the week and close like this because that could signal. Like I said, I don't. Thesis is really simple, right? Whether we go a little bit more, have a false breakout, test this cloud, try to break from bounce and break, or we actually end right here, which I think we could, because there's this little micro head and shoulders here. I know there's an inverse head and shoulder, but there's a micro head and shoulder here, and there's the trend lines and things. So there's horizontal resistance. So we got a battle ahead of ourselves. I don't know what's going to happen in the short term to intermediate, like the next couple of days to a week, but big picture bias, I'm betting on another violent leg down because that's what the evidence that I've laid out is suggested. I was going to go to the 60 to show some execution, but I kind of want to talk about the ES chart. I was obsessed with this diamond pattern for a while. They do have this situation where they can have a fake out. I said that was also part of they have a very high hit rate. And you can see we're already kind of starting to pull back here. Is this a pullback continuation or are we in for a much needed correction? It's sort of like, are we breaking out here? Oh my God, we're breaking out. Pull back, get a little bit higher than that. See how this looks really bullish? Creeping up V sideways, dip go, but then rolls over. This could be the start of that, right? This is a very, very extremely pronounced hook from extremes. I'm not surprised that it started to roll over. I almost shorted this right at the top there when I told everybody that 2 days ago. I shorted the next day, which was technically a harder trade because it's technically harder. Yeah, but this is what corruption looks like, guys. This is a fake wizard economy. I mean, we live in depressed economic times in terms of wealth and prosperity, middle class, the average person with the dollar can buy. People have savings or not, quality of living. But yet the stock market's doing good, Donald Trump says. Yeah, the stock market's always doing good, you idiots, because it's always going to be going up because they're going to always print money. So what you really want to do is just take advantage of these giant corrections and then buy on the way up and really compound it. And you'll see yourself to be shocked. So yeah, this hook from extremes, no joke. We're watching the RSI in a very overbought, right? Starting to roll over. Now this blue and the orange might cross, and then it might go sideways for a while. You see, that would be bearish, and it would take a minute here. Right? As price was going up here, the RSI was going down. I'm just looking for divergences here. A little weird here because it came all the way down here into COVID, but it looked like it was trending up. That was a little weird. I guess it maybe pretended that. Yeah, they're not always 100%, but this is definitely hook from extremes. I don't see the MACD doing any kind of daily divergence. Um, I mean, energy wise, we have from April 26th, made quite a bit higher high and then a huge one here. So I take that back. That's a multi. I was more aligned thinking of a recent one for a pullback, but this is pretty. You see, you have to keep an eye on these ones. You can't say, oh, because this has been developing, I'm automatically going to do it. They all have to manifest in real time. But this is definitely bearish as heck. This is triple, multiple tops here. Huge divergence on the MACD, hook from extremes, the RSI starting to roll over. So yeah, I want to save that chart for everybody. I'll post that in the channel too. Let's see here. Yeah, so we're looking at that. Yeah, I'd be very concerned about that. If you have a stock portfolio, don't think these things don't have giant corrections. Don't let your wealth manager not want to sell for you because they don't have good traders. Just do the right thing. I mean, pop, 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 and then boom, you really want to sit through a move that lasted from February 25 and you weren't break even till June 25. More importantly, you lost out on an opportunity cost of 6186 to buy around 4. I mean, it's huge. And that's what they do. They go up, they go down, they go up. So just keep in mind, watch this candlestick. I still think this is a possibility here that we get this breakdown, one more move up. It's hitting my head and shoulders pattern here. And hitting the trend line here. So that's from 24. Okay, yeah, so there's possibilities of a channel correction here as we touch this touch point, that touch point, and we are basically in a channel here and channel there. We are now in a channel, and we could be having a devastating short move here. I'm going to remove these goofy looking arrows because we know about a 1, 2, 3, 4, 5 Elliott wave countdown anyway, just so I can show off these purple trend lines better. Which I'll do. Smashing them. Smashing. Smashing them. There we go. Okay. Oop. Let me just post that for everybody. Oh, it's not showing it too good, is it? No, it is showing you good. Okay. Yes, you guys can look at that in the channel. I'll get rid of that. That's the one. Keep that. I doubt we get down there. But 90? It's happened well, it's happened in the past. 80, high 70s, yeah. 52 like it is now and only 6 months in, so no, that's never happened. Let me put a circle in there. Oh yeah, so this was basically I was saying how this was an intraday double top that failed, but this was a double top intraday that worked out for a scalp at least, right? If you took it, because if you can find the same price pattern, let's say a double top, if you're sideways or whatever that day, at a key reference zone and past, and you have a stop quarter near the next or a little bit after, you have better odds for a tradable reaction because these key reference zones when you execute on them have an edge. They have a special edge if you can get a horizontal zone in confluence with a directional trend line. And then, of course, if they're super important, like this micro bull bear, is a bias changing zone because we got super strong moves off this range rather than just like buying here or buying at this weak mediocre range. Buying here, right, produced a giant move. So breaking that would have a bias changing implication. What could possibly happen, guys, is that there's a trend line coming down here. Obviously, there's ones on the daily. We could fail here or even slightly higher, not get to that 6971K level, come back down here at this micro bull bear zone, right? And then take one more move high and then try that 6970K area that way. I'm thinking in scenarios because I overall, right? I'm not changing the overall thesis that we're going to have a violent leg down. I'm only in the short and possibly the first week of the intermediate term bias time frame uncertain, right? So I just wanted to clarify that I am saying, that the odds are pointing for another move down. And, slightly red day, nothing crazy, but nothing great either. Just these markets continue to behave the way they do because we are in a, excuse me, bear market. It's okay to say it. It's okay to say it. It's okay to say it, right? We have a shoulder, we have a head, we have another shoulder. We have highs here, so I actually have a resting order on first test for just the back of this zone for a trail reaction. Even if we break it, I'll still take it at the 79 on the weekly. It's not shown here. Area. Right, we came down. This was the current low of the day. I'm not going to give a signal there to get a little scalp. We actually broke it. It came back up. I'm not really interested in this. I think we could come down here, even here, because these two we've been top building. And of course, we as this closes tonight, we'll have the ultimate data for the day, for at least for the day trade for the next day. And obviously for ES, I'll be sideways down again. It's not obvious. Some people might see a pullback. I think this thing's going to be exhausted. Uh, Bitcoin daily hitting trend line. I'm more uncertain about this one, but I said if we did close with sort of a bearish spinning candlestick pattern, kind of like this or this, which looks like that, there has been typically pullbacks. It is a bearish candlestick pattern. It means that we failed before we've gotten to test these higher zones ahead. And I am open to that possibility because that's a possibility that is a potential probability with the amount of conflicting data, the short and intermediate time frame, big picture time frame, still pointing towards another leg down, which will be the buying opportunity of your lifetime. So hide your kids, hide your wife, and get on that Bitcoin train and make sure you buy when the opportunity cycle is right, because that will be life-changing gains for the next 4.5 years. Just blasting into that, getting out at reasonable levels, buying again at the 50 for the counter trends, and really compounding this time on the way up because we've gotten better at doing it and more calm at doing it. That's what we're going to do, everybody. So, like I said, I just want to give a shout out to everybody in the channel that stayed with this channel's evolution. We've had, two folks, even three at one time, and then it became one, and lots of evolutions. But this channel is a holistic system, and it is continuing to advance. And I appreciate every one of you guys. If you have any questions, no one sent me in. You can always send them later as well. And I will see you guys tomorrow in the room. Take care.